So let me just break it down to you people. These guys are wonderful. Nurse their relationship, but that's not your first go-to. I'm somebody, some single-family offices, multi-family offices, fund of funds.
Oh,
Those
honey
are the
bunny,
ones.
you are in for a fight.
Good, right, here we go. This is gonna be one of your favorite panels. I'm guaranteeing it.
Do you want to? Well, I'll step in here. I represent LA County Pension, and while I agree with the point that most pension funds do require large checks, so let me just start with sort of pension funds and what their goal is and what tends to be more attractive to this. Pension funds, unlike these kinds of future funds or foundations, pension funds they have a very specific duration that they are managing towards, which is the lifespan of their beneficiary pool, and what they have promised them in terms of cash flows, right? So every single pension fund is very cash flow driven in terms of what they have to deliver as liabilities. And they are at the mercy of their various state, municipal, and county kind of organizations to continue to fund those at the proper level. And what you have seen, you have the worst examples of New Jersey and Chicago.
Baby, you're building my case here.
Well, hold on, I'm getting there. I'm getting there. Interrupt me one more time, I will go over there. So we. Aren't you glad you stayed?
I think I'm just going to move out of the way, so there's no filling. There's no filling in the sandwich here.
I'm supposed to be facilitating this conversation, but it's facilitating itself. So go ahead, go on.
So, at any rate. Depending on funding levels, if you have very underfunded pensions, you will get pensions that do one of two things. They either get very, very conservative, and they look for investments that are contractual, right? Things like basically the sort of fixed income and every variation of contractually based cash flow and return. That tends to be very attractive to pension funds, especially when they're underfunded. They will sometimes go in the other direction in terms of risk and go to venture, et cetera. However, you end up having a very large portfolio with very small chunks, and it becomes unmanageable. You can have 200 and 300 managers in that kind of a portfolio, which becomes very difficult to manage as a board and as a staff. However, the larger pension funds do have substantial staffs. The smaller pension funds, I think that the most difficult size of pension fund is $1 billion and below. You're starting to get into you have a lot of managers and usually very thin staff. However, the one thing I will say that pension funds have very much started to embrace has been emerging manager platforms. And the issue with emerging manager platforms is precisely that. You know that you might be writing a $10 million or $20 million check rather than, our minimum size is about $250 million, right, when we're doing a check size with a fund. And that's because we don't want to have 1,000 funds. However, we do have 2 emerging manager programs with Lycera. Lycera, diversity is tantamount. If you look at how Lycera has approached our population, LA County is a population that is highly diverse, and it would be very unusual for us to ignore that in how we make investment decisions and how we run ourselves as a board. So if you look at our board, we have made incredible goals to increase the number of diverse members of the board itself, because you are not going to make strong, diverse decisions unless you have people like me sitting on the board, people like Herman Santos Santos sitting on the board and people like Wayne Moore sitting on the board. So we are very strong. And those funds and those particular programs do write much smaller checks because that is just the nature of the business. We can't be 100% of your funding. It's not a good fiduciary rule. But however, we will step in with you at the beginning of your fund in order to help you grow. We also, by the way, press every single one of our managers to show us and prove to us that they have diverse people in their companies, that they are not bringing in the one token woman that they happen to have laying around over to the meeting, that they actually have lots of women, that they have lots of Hispanics. But you have to continue to demand that these companies look for those opportunities, and that's how we encourage opportunities broadly across emerging and diverse managers.
Maybe I can actually talk a little bit about sovereign wealth funds, since all this panel is about. Thank you to both of you, though. It was very entertaining.